Hey, everybody, it's March 5th, 2026. Do the markets got you down? I got a feeling that the markets gotten some people down. At the same time, the consensus within the general group out in the world is that we're building a shelf right now and the bottom's in. So, mm, I'm going to go into that, but I would like to say right now is that if the markets got you down, that's counterintuitive. That means you're sensing something, right? That means that there's an opportunity coming that could be life changing. If you missed out on the Golden Cross over 3 years ago, then the resolution of this death cross, which always comes usually after a double top, which we've had after a run up, the opportunity that comes if you time it right after that is incredible. Because remember, the shelf does come before the Golden Cross. The Golden Cross will confirm an uptrend, but you will getting a much higher price. At the same time, you don't want to be early because you may be catching a falling knife. So for people that are less advanced, this is where the dollar cost average strategy comes into play. Where since they say we don't know the future, we're just going to pick a couple of different levels. The problem with that is that is the quickest way, one of the quickest ways to blow your account because you're doubling down on losing ideas. So it's the complete opposite of a fixed percent risk model, which would lower your risk the smaller your account would get, and your risk would naturally grow the larger your account compounds because it's a fixed percent risk model, which is great because it could free up your real estate. And within that fixed percent risk model, it does not mean that you have to take that amount every single time. I try to actually get better trade location and go under that. So everything within the system that I'm going to talk about today, there's a logical, back-tested reason why it is part of this holistic approach. So I just want to caution everybody that even though we have been in a balance since early February, which is about a month, right? I mean, that is a mature balance. But is it mature enough to launch an uptrend that then is going to override this insane larger time frame bias? With not even me going back to September, you can see where the dominant downtrend has been, right? I mean, let's just zoom out a little bit. Okay. I mean, if you really want the real picture here, the markets move in phases. Now we're going to look at the Bitcoin's history here. Right? And this is a substantial move on the shorter time frame. We knew this was a mature balance. It was not just a mature balance, but it also had other pre-market factors for a trend. As I said, there was going to be a resolution to this coming week because, and the day that it happened was actually a market moving news day. That's another edge for a trend. Okay, when you have market moving news, it increases the volume in that day, and the volume is correlated with the trend volatility, right? So we had a mature balance, which is defined as anything greater than a week, right? And we also had represented by these two trend lines that I'm trying to draw here, volatility contraction, right? Then if I bust out the VRVP, we also were launching from a high volume node, right? So we had this volume contraction. We had the trend starting from the high volume node. We had on this day market moving news. And it's funny that I actually said I'm going to be including this new. I usually use the FOMC, okay, and the CPI are the ones that really move the indices, like the S&P 500, which is my background, and of course Bitcoin now. And everything else is already kind of been factored into price, right? However, I've noticed that the PMI now has become important as well. So I just mentioned that. That was the Wednesday was the PMI. That was, and then we had the trend. Okay, so but are we 100% out of the clear yet? Now, this is what's the context? If you just look at the last month, you would just say balance breakout. We're building. That's it. You know what I mean? You have to look at the context. Okay, we have since October 7th, right, when we had the triple top and the false breakout, right? If you didn't have the principal base to count your leg counts up and sell on strength, then when you had the bearish candlestick pattern, anything up into that was if you didn't sell, right, this was the other place that you could sell, right? I mean, we got in here again, we sold here, right? And now we're still flat. It's very tempting now to say, oh my God, I missed the bottom. I have to just throw my portfolio back into this. Okay. First of all, patience is something that's taken me about 10 years to develop, for one. So I understand the energy. And since I do this publicly, it's taken me a while to actually take other people's opinions and just have them be floaters in my mind, but not actually factor them into the system. I've actually used people that have heckled me and have said that I've been wrong by doing counter thesis to me as contraindicators. But at the same time, right, all that stuff is just emotional something. If we could really just look at the mathematics here, the charts, we're going to see something very interesting. We know the markets move in phases, up, sideways, down, sideways, and up, right? Every single uptrend, even in the bull market, had a more mature balance than this one, okay? The other thing that I'd like to mention is that we can look at this on two different time frames. I'm going to look at first the weekly, and then we'll get back to this one. Let's go to the weekly. Okay. I mean, we can see we're in a different phase of the market, guys, right? I mean, we clearly we're in an uptrend, right? Since 2023 early, and it's been a substantial run. I mean, action, reaction. Look at this action, reaction. I mean, this action wasn't as much as this action, but the reaction was quite substantial. You know what I mean? That's why I think we're in the first phase of this breakdown. If you want to mirror this just 2022, we can go back in time more, but this one looks really good. I have a death cross here, right? I mean, what are moving averages really, guys, right? Moving averages are just derivatives of price. All moving averages and all indicators are just derivatives of price, and they help you see certain things to confirm price. I can count the legs up and know we're in an uptrend, zoomed out. Although, even though in that uptrend, there's going to be sideways phases, down, everything. Like, if you're trading daily, you will feel the larger time frames in a way that other people can't. It's a top-down multiple time frame approach. So anyone that thinks that if you're trading actively daily, if you're day trading, that it's dirty or doesn't provide any contextual analysis for portfolio dynamics, you're sorely mistaken. Let me first say that. And the second thing I'd like to say is that since all derivatives are indicators of price, the way that price behaves and reacts around moving averages will have a beauty principle behind it, right? If the bull run was intact, right, this moving average here, and you could pick different ones. I'm going to try this 50, which I've always used, sometimes I use the 200, the 50, the 40, or the 50 and the 20, or the 40 and the 20 to look at different things. In this case, I'm going to use a 50 and one half of it. Whatever you do, 100, 200, just make sure you're using a slow one and a fast one, because how they react is going to be interesting, right? I'm going to use this 50 here, which in this case is going to be my slow one. When I go up, when I show you this on a different time frame, I'm going to have that be the fast one. Let's look at my fast one here. We're just going to pick. Why am I picking the 21? It's a psychological one that a lot of traders use. Okay, I'm just picking it. You can actually just shift around and find your own. Okay. But you have to make sure that it has back tested so you're not getting false signals on this, right? For the entirety of the bull run when it was in place, right, we had this 50 moving average holding, right? And now, and the entire time, the 21 held above the 50. Now it actually flipped, right? The 50 is now above the 21. Right when I said this is going to be the next leg down, get out. This is the false breakout pattern because this was a rising wedge in that death cross pattern context. On this weekly, there was also, if I go here, a huge momentum inverse zero line reject. We couldn't get anywhere over this zero line. Okay. That's a reversal signal. Just memorize these patterns and do the counterintuitive thing. And most of all, shut the fuck up and follow your system. We'll start right there. It's hard to get like this, but just get on it. Just do it. Okay. I'm gonna Shia LaBeouf on you guys. Just do it. I'm just talking to myself. No one showed up. Anyway, I don't give a shit. Been trading like a cyborg. A damn cyborg. Okay. That's how mechanically systematic. I'm like, the system says this, the system says this. I can only do what the system says because the system's pure. And Donald Trump and all the billionaires talking about how it's never going to go below 90,000. You're all punks. You're all pedophiles and punks. And my mathematics is better than yours. You punk ass bitch. Oh, God. I don't even know if I'm live right now. Am I live? Okay, I'm back. My internet's terrible. Hopefully the recording's still live. Okay, so this breakout now that you see, which is about a month, is happening in the context of a death cross. And the last time, if previous market behavior influences future market behavior, then we can go back in time and see what the hell happened. There's a death cross, right? Violent leg down, breaks that key substantial support. Here's a death cross, violent leg down, breaks that key substantial area of support. Then what do? Everyone's like, oh my God, that's it. Blah, 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 blah. You're an idiot. Da 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 da. 30's a shelf. Breakout, inverse zero line reject. Yeah, bam. 50% down. I mean, listen, when you're putting $500,000 down on this, 50% lower is a big fucking deal. Okay. And I'm about to become a multi-millionaire trader. Facts. Started with pennies. Facts. And then we get a third leg down. Boom. Now anything can happen. That's the thing. That's the number one principle. I'll just come out and say that anything can happen. This could be an anomaly, maybe blah, blah, blah. But why would you bet on an anomaly right now? I wouldn't. See, finding a positive expectancy is not about being right and being cute and being smart. It's about following correct process. Following a positive expectancy based strategy is about good applied thinking because you're thinking long term, you're thinking in probabilities, and you're thinking about your risk to reward ratio. So when you multiply them together, you can get a mathematical positive expectancy. And I think like that, and I show you the mathematics on it in your quantitative charts that I've given you. And I hope you're also filling out your qualitative charts for your psychological journal because this, to get as good as it takes to do this professionally, takes work. You need to put in the work. And if you haven't put in the work, you're a punk ass bitch. No holds barred this episode. Telling it like it is. This is a podcast one, solo. Okay, going back in time here. All right, because if we look at that first leg down, it had a huge pump. It had a similar pump. The day that it did it, blah, blah, blah. Yesterday had a 10%. I said, okay, we're only at 6.5%. It's mirroring itself. It's mirroring itself. Donald Trump just said, here we are with the Bitcoin bull run. He wants you to go in so that he can buy at the real bottom whenever they know that it's going to happen. We can figure out the probabilities of it based on the mathematics. First leg down popping up, forming an inverse zero line reject. We have a death cross. All right, we can go back in time. Here's another X that I drew. This also happened in July 18, right? Double top, death cross, blah, 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 down. Double top, death cross, multiple legs down. Double top, death cross, false leg down. So this, to just say that it's going to go, we've had a huge bull run in a bear market since the fall. And now we're just going to go down market. Now we're just going to go straight up. That's against that market cycle principles. It's against the death cross. It's against time factors. See, there's bigger principles at play. See, you're looking at in these charts, the collective conscious of mankind, not some one guy here doing this. Okay, so this is just one time frame. Maybe there's false signals. We went back, we found there was one that in 2018 it worked. Let's go out on a different time frame here. We're going to go on the daily. Get rid of this one. Okay, now we're going to go on to 3-day. Most importantly, we're going to get out of this Bybit account. We're going to go on an index so we can see a little bit of history. Okay, now we're going to look at different ways and seeing if these two moving averages play the same game. Obviously, like I've used the 200 for a long time. There's lots of different ways to use this. The 200 moving average is represented by purple. It's a classic one. Many traders will look at, you can see the trend has been up. So the derivative of price shows the streaming and it streams out the outliers to a nice moving average. Now we can look at it through a different lens of time, a slower one. Since we use the 50 and the 21, let's use the 200. A lot of people use the 200 and 100. I have, but this is a 200 and a 50. Okay. So look what happened. 2022, double top. Building a shelf near an area where we thought we were in previous behavior, even though it was popping up into a major high volume node in the context of a double top. We also had the moving averages give you the death cross at this point as well, right? At this point in time, you had to sell on strength. Obviously that's this real sell signal, but that's not even hindsight. You just got to know to get the courage to sell on strength. Just say, I sell on strength. And this death cross confirms it, right? And then it wasn't like this was the area that we are now building a shelf and we're popping up, because they also had big moves this day. All right, if we go on this time frame in 2022, we went from 25,327 to 32,393. 25,462, 32,529. That's significant. It's more than 10%. Let's go over here. And you say, well, okay, I go whatever. I mean, well, this is a big deal, guys. If you get in around 30 and you have the patience to get in anywhere from 17 to 15, you save 50%. I mean, I'm not saying you got to be perfect at this or whatever, but I mean, we'll go back in time and look at this, right? Notwithstanding when it came up here, popped up here, really crazy inverse zero line reject here. Momentum, that means I'm always thinking, is this going to be a breakout or is this going to be a false breakout? Those are the two big patterns on sideways channels. That's it, really. Okay, they can contract, they can expand that way. They can be a volatility contraction, but I mean, this is what they do. They all end in a balance, but we have to be on the right side of that balance. And the context is that it's happening after a death cross when we made a double top. Plain and simple. And the momentum is an inverse zero line reject, and we get 2 legs down, right? Let's go look. Like I said, double top, breaks down, death cross, 1, 2, 3. Double top, breaks down, death cross, leg 1, double top, leg's the first leg. We've talked about that in the channel. Now there's a confirmed death cross. We broke down and goes sideways and goes up. Okay, that is so for even in a bull run, it took really long sideways channels to get a trend up, right? Because the bigger the sideways range, the bigger the trend out of it. You need potential energy to get kinetic energy, right? So since we've had such a bearish, larger time frame bias represented by the downtrend since fall, late summer type of a thing when we did the triple top, is it really just going to be an up market? No, especially how it's behaved in the past after that death cross. We broke that key support. This took a while, right? We have even a more significant inverse zero line reject on this 3-day chart. We looked at the daily, we looked at the weekly, we looked at the 3-day, we'll look at the week, we'll look at the 2-week, and then we'll look at the monthly. When we're going to execute a day trade, obviously these higher time frames are really good for our position and portfolio reloads. We obviously want to be on the side of the larger time frame buys, so it's really good for our income day trades as well because we want to go with the larger time frame buys. Often it's neutral, right? I've had it marked neutral bearish, right? Obviously, the longer this goes, right? They're longs with neutral bearish means you can take longs, but they need to be at really good trade location. There's still an edge for the bears, right? Now what's happening, right, is that, and I was imagining this, even if this broke up out of the triangle, we still have an inverse zero line reject, and it needs to sustain because if it doesn't sustain, it could turn in what happened in 2022, which is a false breakout pattern where it looked like it was breaking out, had a very similar inverse zero line reject, not even a hook from extremes because the CCI can't get over the zero line, and then huge legs down. And but you know, a lot of people saying this was a shelf, and then a lot of bottom building, and then a potential breakout. But inverse zero line reject momentum false breakout pattern. Statistically, when a false breakout patterns happens, it usually will statistically go to the bottom of the balance. But in the context of a larger time frame bias downtrend, it can get much worse. That's the golden cross. We don't need to talk about that yet. Obviously, it's when the fat. We'll talk about it later. This is the important thing now. This is the death cross. When the slow goes above the fast, we're breaking out. Is this a true? Now, true. If this was a true balanced breakout pattern, you know, usually they tend to go 100% of the range they break from. So even if it gets up here, doesn't mean this death cross is invalid. However, even though this volatility was a contraction and we launched from it, and this would be actually slightly better seen on a smaller time frame. So let me go to this. And then I'll go to a 60. So, you know, we've been in a sideways trading range where there has been volatility contraction. We did break out of the high volume node. Boom. Right. These are all on a day when there was market moving news and above average relative volume. All my pre-market factors I've listed for a trend day ahead of time. Boom. I mean, it doesn't mean so. One of the things I in terms of the direction, if the more time you spend above the VPOC, it increases the odds for up. The more time below it, increases the odds for down. Now, as this broke out, right, this is technically the last, you know, the key swing high here, touching here, touching here, touching here, almost getting there, touching there, breaking above it, using it as support, broken below it, now going back up into it. That is my definition of the final resistance zone, where if we did break it with conviction, it would be a balanced breakout pattern of a month long, where it could at least take us up to the next zone or two, right? We could go a little bit more of a run. Still doesn't invalidate this bigger picture thing, so it's tough for us portfolio guys that don't want to get too active right now, that are okay with being patient and okay with possibly being wrong here. We don't know the future. I'm just showing you what's happened in the past, and then we make an educated decision. That's the best we can do. That's the smart thing to do. But I also said today that as this was coming up into here, keep in mind I've been sidelining for day trading, so this is just us looking at the context, waiting for the next thing that will happen. That would be a lower risk entry, right? Is that if we did fail, if we couldn't hold at least a sideways channel above this trading range, if we broke below this, especially with conviction, and I'm, you know, what are we at right now? We've retraced it. We went down like 2%. You know, we broke this sideways range and we came into it. I did say that the last stance for the bulls, right, is that usually what happens on a pure trend day, the last leg of the day, which this is actually the right before the open, but if you just look at this as one day, usually is an area where buyers can get active. But in the context of then going sideways and then breaking below this trading range, thus potentially producing a false breakout bigger picture pattern, I didn't think it was contextually valid to take because I'm not going to add on right under a resistance zone. You know, in fact, this wasn't a short, obviously, because the momentum was too strong with all these pre-market factors for a trend. But at the same time, it's like usually what happens is that because people miss this move, they get really aggressive on a day when statistically it's very unlikely to get two pure trend days in a row, just in general. Notwithstanding the fact of all the bearish death crosses and um, uh, the double top and where we are contextually in the market, just statistically they're less likely. So it's just riskier. So I mean, but what's happening now is that we're building structure below this resistance zone, and we could potentially be going much lower. That's what I was saying before this happened. Now, obviously, if we break above it, whatever, that doesn't validate it, but we're below it, right? If the bulls were going to have a really good, and we can go to the daily to look at this. Right, hook from extremes hitting here. Right, let's get out of the 3 day because that's more of a higher time frame. If we want to see what happens the next day, we'll go to the daily. We're also going to zoom out. We're going to go to 2 week and monthly for as well. But you can see on the daily, right, we have a hook from extremes well over the 200. Anytime we got to this level, there started to be, one overshoot and then a reversal, one overshoot and then a reversal. Here we had the hook from extremes yesterday, and this was what I warned. We're closing below the balance, and that's not good for the bulls, right? If the bulls were going to really try to make another rally, which you see how I clone this, like technically if this is a true balance breakout pattern, they tend to move before the next resistance zone 100% of the range they broke from. I call it the 100% range principle. But if we close below the balance, it thus produces a false breakout pattern, and that is bearish. And right now, ladies and gentlemen, this is a false breakout pattern as we're speaking. Now, to confirm it, we got to see how it closes. We are getting towards the end of the day, and the intraday bias has been bearish, right? I'm not going to say the sustained momentum has been incredible. This is more of a sideways. This is more like a sideways down, like a sideways day, hybrid day. It's not a downtrend day, but it's certainly a day where the bears have been in control. Now we're not going to just like look at days in isolation. That's contextually with this holistic, multiple time frame, top down approach. But closing below this trading range, right, is potentially gearing up us for a false breakout pattern, and they usually go towards the lows of balance. And statistically, since markets move sideways much more frequently than they trend, because markets are facilitating trade, and to agree on price, we have to go sideways. They're more likely just to fail more than they are to have these breakouts. I mean, this went sideways for a while. You could see everyone thought this was the breakout, but keep in mind, as this was happening, I was telling people, be careful. We got out right the day or two after. It was on the 16th. Right. This isn't, you see how we're rising, and then we get, this is called a rising wedge, right? It's gearing up. If you just put horizontal, it'll look like a false breakout because it'll come back into the balance. But I had this rising wedge ahead of time because you can see just like how well this trend line works. You see, we couldn't really draw a rising wedge last time this happened because this was like more of a pure sideways range, top, and then we went sideways and then broke clean above it, pulled back. See, that's a balanced breakout pattern that also happened that, for example, this 200 moving line, we've held it now. You see how this was the whole bull run, and then we just almost, but then we, here we went below, but then we broke above it. Then it went up another leg. Then we, a little bit, very much the same distance, beauty principle style, very much the same distance, beauty principle style. Then we break above it. That's human behavior. The longer this goes up, the greater the odds that it reverses. This is multiple legs in, multiple legs down, and now we've reversed one leg down, two leg down. To me, this is, and I showed you on the other chart, the first leg down out of this context. Now that, right, I use the daily maybe for what's going to happen the next day. I'm going to look at the 3 day, the weekly, the bi-weekly, and the monthly for the real zoomed out direction here. So not good, potentially false breakout pattern. Hook from extremes, right? Now we'll go to the weekly, and then we'll make that the bi-weekly, and then we'll look at the monthly. One, two, three. Yes, you see, this is a trust. This is a up. By the way, I think I'm going to make this one private because I don't want. Oh, hang on one second. Sorry about that. I had one of those scam calls. Um, all right, not much more information than we've been looking on this one. We'll go to the monthly now. We just went up to the 2 week. One, two, June. Right? This is major resistance, broken resistance acting across multiple cycle years, acting as support. So I'm not surprised that we got the reaction, but we're going right up into the uptrend, right? So just even on a candlestick pattern perspective, this is not resolved yet in the slightest, and we haven't even gone built a sideways channel yet to build a structure for another trend. Therefore, that's the lowest odd move that we just keep going up. Be careful of this RSI stuff. It is seems to be behind the inflection. As you can see here, the last time we came up here, even as it was going down, right, it starts to go, kind of giving you false signals. Like you might get hope that the blue goes above the red for the start of the trend up, because that signifies the trend up. But then we just are kind of going sideways. See how this blue's gotten over red? Don't let that be a false bull signal, because I think that's the start of a sideways, you know what I mean, with another leg down. That we have to go flat for a bit. You see how we went flat and then up, flat and then up. This is so that don't think this is up now. Now, granted, when we go sideways for a while, represented in price and the RSI, and then we start to go up here, and the blue significantly crosses over, right? That's confirmed. And every pullback, right? Oh, blue is confirmed. RSI helping you there, right? But just don't be so literal with it, because like blue over red here, but doesn't confirm anything, because it could just be going blue over red, or back and forth just like it was sideways. So that's just want to give you that one as well, to look at things in that way. Another chart that we've been talking about is the gold. I told everyone to take profits in gold and silver. Let's take a look at this. Not on the monthly though, guys. I don't want to see this on the monthly. Okay, one last chart. Get rid of that. Gold, we told people to take profits on the gold double top. It's probably bouncing around. I don't care what it does after this. That's correct process, is to reduce risk, and you sell on strength, making a double top with a bearish divergence. Multiple legs up. I mean, how greedy can you get? Okay, so now we're going to look at this. This indicator here is just, like I said, another derivative of price. It's streaming out price, but it's what I like about this. It's called the Gaussian channel. Is that it's like an enhanced moving average, in a sense that you can see how price, you could see, you don't have to use multiple moving averages, because the channel is kind of giving you the thing, and then it's got the green and red for the visual just to help you. And you can see we flipped red right after we were making that first false breakout pattern up. Everyone thought this was a breakout. You see how we were trying to make that bigger picture breakout pattern, but as we came back into bounce, it became a false breakout pattern, aka going to go down to the bounce. It turned red right around that time. So, and also as it was making that, you can see here it was making, like I said, not even as good as this one. Look at that. That is a nice inverse zero line reject. You can't get the CCI over zero line. And you can see the channel helps you with the trend, because even though this is been a green candle, it's keeping this red. And like I said, it doesn't go green till it actually flips. Really, we're in a trend a little bit sooner here, but you can see it kind of helps you The candlesticks will always, no matter if they're up or down, it's kind of always helping you realize that this is up, but it's in the context of this red down. It's pretty cool, actually, psychologically for that. But look at this. Look at this hammer candle, hook from extremes. Hammer candle, hook from extremes. Sideways, sideways, sideways. First leg down. First leg down. Sideways, sideways, sideways. Look, double top, breaking the meridian line of the Gaussian channel, going sideways, holding a price acceptance, market structure, breaking down out of a trend, right? Even stronger because it like broke below the Gaussian channel and then went down. And you could expect a steeper reaction because, like, just think about it, right? Action, reaction, right? We had a relative to this one. This is just visually modest. I don't care about it's just not as big of a move, right? And then we've had a big move down, but we haven't had that big move down. We've had one sideways down here, one sideways down here, popping up, popping up. It's going to have a violent leg down. Now, anything in here, just be prepared to hold it sideways for a while. It could have another two leg down, but if you can just hold for this next violent leg down, which who knows when it can come. I mean, this based on a lot of these, it comes. My Bitcoin time cycle says early May. Okay, you look at how this has behaved in terms of how to get back to break even. It could come anywhere from end of March, April to early May. Like, just be alert right now that we could get to that level maybe end of March, and then it goes sideways to sideways down around that level for April, and then maybe the breakout happens in end of May because my Bitcoin time cycle chart, based on a weekly time cycle decode, works very well. I'm not going to give you that weekly. I'm not going to just give it to you. All right, you can actually make your own cycles and figure it out. But I'll just show it to you actually, real quick. Let me think for a minute. Where's that? It's on my weekly. Let's go to the app. We'll go to the Bitcoin weekly time cycle chart because this one says like end of March, early April. And my Bitcoin time cycle chart, which would be here. Yes, good. Okay, let's get rid of this extra data for now. Right? I mean, you can see how well this works. Bump, bump, bump. Hits the inflection point. Hits it here, 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 inflection point. Here. I'm telling you. Okay, so it works well. So we got it in early May. Boom. All I'm saying is don't think this is just going to be a straight rocket ship up in May, guys. Okay. The context of this breakout is very similar to this first leg down. And this is a death cross, which I'd have to use the index because apparently Bybit didn't have a Bybit before July. That's stupid. But I don't have my time cycle on this one. That's okay. You can just see the death cross. It's all good. I would just be alert, be aware. There's going to be an opportunity of a lifetime coming up. And as far as the day trading is concerned, guys, we've only been short since we called the 95K reversal. We told everyone to get out. Hey, that was a false breakout. Now, I hate to be the bad guy again, but I'm not believing, and based on the facts in the chart and the market context that I just went over, the system says this is also going to be a false breakout pattern, and it'll be a very bad one, like a violent, quick. At that point, a lot of people are calling this the shelf, and a lot of people are DCAing in here, and that's fine. Just know that those same people might get a little demoralized if this thesis that I've been talking about is correct, and we do get this another violent leg down. Those next groups of people that have been buying might be a little demoralized, and then the narrative might change. All I would like to say is that try to not follow other people's narratives other than the principles based in the chart, because principles will lead you to profit. Trusting in a guru, a CEO, if you put all your trust in something that is not based on the facts in the chart, then you're not doing yourself a service. You're trusting, put your faith in potential lies. But what I just showed you is facts. This is how it's behaved in the past. And now I'm telling you the best we can do, because since we don't know the future, is now correctly respond in a way that the chart is suggesting that we do. And that's what we're going to do. All right, guys. You know me. I'll be working every day in the trenches, getting it done. Let's do this. Principles of profit. Over and out.